Let's look further now at what the markets are currently going through. Expected to see some further pressure stemming from the Asian markets this morning as investors digest disappointing Chinese economic data. Zwelakhe Mnguni, Chief Investment Officer at Benguela Global Fund Managers, joins us now to talk us through the latest markets. Zwelakhe, good morning. Good to have you with us this morning on the Newsfeed AM. Give us a sense of how the markets opened in early trade after falling the most, particularly in the week's last session.
Yeah, Thabo, thanks very much, and good morning to your viewers. I think the market opened a little weak this morning again, and I think that's largely on the back of the story that you just touched on. The Chinese economy growing a lot slower than what was expected. I think that has a direct impact on the expected orders for the commodity sector, and we saw that sector coming down almost 1%. Also, the commodity prices were also down this morning. I think gold was down just over 1.5%, and platinum was down 3.8%. I think on the upside for commodities and downside for the rest of us is that the rand has weakened to about 17.20, about 13-cent weakness. So that boost the rand price of commodities, but it will start stoking inflation because we import fuel. I think also the news that the EU is talking about putting a cap on Russian oil. We are likely to see that the oil price strengthen. I think it did strengthen a bit, and the implication is that there might be a shortfall on the supply side, and that will put the price pressure up. With the rand weakening, that will stoke up inflation in South Africa. I think South Africans can expect rates to continue going up from the central bank.
Now, looking at those Q2 numbers coming out from China, what's the picture that's beginning to emerge, particularly around the global risk outlook, but also clues that we're getting here around the question of recession?
Yeah, look, I think China is a factory of the world by any measure. I think when they had their own lockdowns where the people couldn't move, people couldn't go to work, I think that had a major impact on the industrial output, but also on the ordinary consumer spending. So we saw that while the GDP number came out at 0.4%, a growth of 0.4%. I think the retail sales were up 3%, but the industrial side was actually down quite a bit. So I do think that sets the scene for a global slowdown, because either the products that are being ordered from China might not be available immediately, and that would have downstream effects on the economies that are importing. But equally, China's own production would then require less commodities because they have to restart the production and stock up and then run the production plant. So I think we probably, the pieces are falling into place in terms of setting us up for a recession, a global recession.
Now, Mercedes-Benz aims to produce some 50% electric vehicles for the domestic market by 2026. However, of course, there's this back and forth, Zwelakhe, that is going on around the emissions tax. They are calling for parity for electric cars and those with combustion vehicles. How is this likely going to impact on their forecast and what they would like to do?
I find it fascinating that a company like Mercedes could want to slow down the process of bringing in the electric vehicles into this market. Whereas in Europe, where they come from, they basically have, there's no restrictions that they've imposed on anybody. And the point I'm making is they are a beneficiary of these high import tariffs that enable them to make more money on vehicles that they produce here in South Africa and sell to the South African market than what they actually sell outside South Africa. So for them to be allowed to even raise their voice about what policy options the country should take, I think it's disappointing.
Emira Property Fund plans to acquire the rest of Transcend Residential Property Fund shares. Talk us through the specifics of this purchase and how the property group will benefit from this.
Yeah, I haven't looked at this transaction in particular, but I do think that it's probably going to be one of the early trends within the sector where the sector starts to consolidate. I mean, there's a lot of excess capacity in the office market and to some extent in the industrial market. So that capacity is probably going to need to be reorganized by the sector, and certainly we would see these type of transactions happening where the guys consolidate to try and repurpose some of the buildings. I think that could be also another theme. But one major driver of this is that some of them are heavily indebted, and they've seen rental reversions. In other words, their tenants have asked for lower rents than what they were paying before to be able to continue renting, and that has had a material impact in terms of their ability to continue servicing high levels of debt. So they need to revise that, and we're going to see some restructuring in that sector.
Zwelakhe, thank you for your intervention this morning and bringing us that update. That is Zwelakhe Mnguni, the Chief Investment Officer at Benguela Global Fund Managers.